Hi, my name is Darnell Miller, and I'm the head of ETF Capital Markets here at Vanguard Investments Canada. I'd like to take a few minutes to share our thoughts on how and why the ETF ecosystem helps produce better outcomes for investors. ETFs are enjoying explosive growth, with investors who appreciate their flexibility, diversification, and lower costs. These benefits provide advisors and their clients with an excellent chance of achieving investment success and helping build better portfolios. To understand why the ETF market is so efficient and so resilient at a time of record inflows, increasing assets, and higher market volatility, let's take a deeper look at the ETF ecosystem. This elaborate process includes investors, issuers, exchanges, and market makers who together help produce more favorable outcomes for ETF investors by increasing liquidity and lowering cost. As ETFs continue to evolve, investors and advisors can benefit from a deeper understanding of how these key players help shape the ETF landscape and make exchange-traded funds more efficient. In terms of the ecosystem, ETFs offer multiple layers of liquidity, which benefit investors and markets. One layer is the secondary market, or the trading of ETF shares between two market participants on an exchange or a trading venue. An additional layer of liquidity comes from the primary market, where ETF shares are created and redeemed in exchange for an underlying basket of securities. The primary market is what helps keep ETF prices in line with their fair value. This process helps ensure that ETFs are traded seamlessly throughout the day. To facilitate these layers of liquidity, there are a number of participants in the ETF ecosystem, which include investors, issuers, exchanges, and market makers. Let's take a deeper look at each of these. Investors place orders to buy and sell ETFs on an exchange and, generally speaking, represent the demand. This demand from investors helps shape the ETF products that come to market. ETF issuers are asset management firms, such as Vanguard, that develop, register, and distribute ETFs. These ETF issuers are responsible for structuring the ETF product. This includes selecting the benchmark, setting the fees, and determining the investment approach for each fund. The way the product is structured will directly impact the transaction costs that investors pay when trading the ETF in the market. Issuers are also responsible for controlling ETF creation and redemption activity. Issuers are responsible for the process that allows new ETF shares to both enter and be redeemed from the market. This creation and redemption process is referred to as the primary market. It allows ETFs to trade efficiently and ensures adequate liquidity for ETF investors buying or selling in the market. Now let's move on to the exchanges. There are two ETF exchanges in Canada, the Toronto Stock Exchange, referred to as the TSX, and CBOE Canada. In addition to providing listing venue for ETF products, these exchanges create orderly markets by ensuring that investors' orders are held to the national best bid and best offer prices. Exchanges also incentivize market makers to provide liquidity in listed ETF products, which helps ensure that there will be someone on the other side of an investor's order to buy or sell an ETF. In addition, they provide data, thought leadership, and support for the entire ETF community, issuers like Vanguard, financial advisors, and of course investors as well. ETF market makers consist of firms that provide two-sided quotes to buy or sell any ETF throughout the day and execute investor transactions. By constantly posting orders to buy and sell ETF shares to meet investor demand, they are the primary providers of liquidity for ETFs, and through their efforts and technology, help keep investor executions close to fair value. The four key players of the ETF ecosystem create a robust and interdependent framework that shapes the ETF trading experience and makes the ETF market both liquid and efficient. Investor demand helps shape the ETF products that come to market. Issuers structure ETF products, which directly affects investor transaction costs. Market makers post quotes on exchanges to satisfy ETF investor demand, and exchanges create an orderly market for investors. The result of this intricate process is lower cost, enhanced liquidity, and greater trading efficiencies, all of which benefits investors as they pursue their long-term financial goals and give themselves the best opportunity for investment success.